Hi, this is Will Phipps from Angle & Focus Up to Newburyport. Now, as many of you know, I do love to chart up some data. And today is the big jobs report. So the most significant input to the Fed thinking, apart from CPI, that happens every single month. Now, what's been going on? Well, this I've graphed up. You can see January 2025 all the way through to our friend here, January 2026. And what is the news? Well, turns out only 22,000 jobs were added in January. For context, it was 111,000 in 2025. That's an 80% drop. Why does it matter? Well, the two remits of the Fed are clear. One is jobs, two is inflation. And currently, jobs are looking soft. In fact, you could argue there have been 4 or 5 consecutive declines, particularly some of these really big negative numbers. And there are constant revisions as well. So this is the thing to watch out for. The Fed meets again on March the 18th to the 19th. That's when they make some calls about interest rates. Interest rates are not only decided by the Fed, but they are linked. Mortgage bonds obviously being the bigger influence on mortgages. However, watch this space because the economy is showing signs of stress, and with jobs as they are, it's a key indicator that things could be happening soon. So what should you do? Talk to your lender. Get the latest rate. Consider even remortgaging. If you've got a rate that's maybe 7.5% from a couple of years ago. But there's lots going on in the mortgage market. Get in touch with a good lender. And if you need some advice, you know where I am.